We're going to need some charts. We're going to need a 20-period moving average on the chart. We're going to need a 200-period simple moving average on the chart. I had a very valuable talk on the 5 or the 4 key moving averages that I like all of my traders to utilize. These are a few of the 2 of them, the 20-period moving average, the 200-period moving average. We want to grab the stock or the item's prior day's close. All of this is going to come together, and I want to grab yesterday or the prior day's late day price range. I need all of these items to start putting together the proper location. Now, what you're looking at, let me grab a pen here. What you're looking at is you're looking at a portion of, or the latter part of yesterday's data, which is here, okay? And you're looking at this morning's open and from the open. Now, what I want to do, I'm going to change the color of this. I want to start off with us identifying the specific items we need to come up with the proper location. Now, my traders are taught to do this before the market opens. They're going to first grab the 20-period moving average. That 20-period moving average is a simple moving average, and that's that blue line right there. This is before today's opening price. We're going to also grab the 200-period moving average. So item 1 is the 20-period moving average. Item 2 is the 200-period moving average. We're going to grab item number 3, yesterday's or the prior day's closing price. That's that. I'm not quite sure if you can see it on your screen, but this dashed line represents, this green dashed line here represents where Apple closed for trading the day before. This is item number 3. So we've got the 20-period moving average. We have the 200-period moving average. We have yesterday or the prior day's closing price. We need one other thing. We're going to take the last 45 minutes or so of yesterday's price data. So the last 45 minutes, I don't want an hour. I don't want 2 hours. I just want the last 45 minutes or so. All right. So let's say that the last 45 minutes or so is basically this block of data right here. See that block of data right there? Okay, there it is. Now that's item number 4. Now let's cover the 4 items again. There's the 20-period moving average. Okay, there's that blue line. That blue moving average, that's the 20, item number 1. The 200-period moving average, simple period moving average, that's item number 2. Where did the item that you're looking at close? What was its last price yesterday? In this case, Apple, right here. This is the closing price from yesterday, item number 3. Let me section off or block off the last 45 minutes of Apple's data. What was the last 45 minutes of activity? More or less here. I'm going to go to the top of that activity, and I'm going to grab the bottom of that activity and create a box. That box, that last 45 minutes of Apple's price data, that box is item number 4. Now, including all of the items, I am now going to take the top of all of those items and box it in all the way to the bottom of those items. So number 2 is the bottom item. The top of my boxed in price data is the top of those items. Now, this is what I call my fabulous 4, okay? I've grabbed 4 items, the 20, the 200, yesterday's closing price, and yesterday's late day price block or data. This is my fabulous 4. So this fabulous 4 block gets extended into the future, which is today. Now, here's the general guideline. Once you have your fabulous 4 block in place, And once you've extended that block into the future, now this is before today's market opens. Here's the theory. If Apple opens above this block today, the odds of follow through to the upside are higher than the odds of a movement to the downside. If Apple opens for trading under this block, the odds of follow through to the downside are higher than the odds of a movement to the upside. It's not that opposite moves are not possible. We're just talking about what happens more often than not. So above the Fab 4, we're looking to move to the upside. Below the Fab 4, we're looking to flurry to the downside. All right? Okay. So we've got our Fabulous 4 block in place. As you can clearly see, that Apple opens for trading under the Fab 4. This tells us that the best trades will tend to be to the downside. Your best option is to short Apple. The $64,000 question is, when do you strike? Do you just jump in right away? And the answer is no. We now have a directional bias. The stock opened under the Fab 4. We have a directional bias, but we certainly need to know specifically now when to strike. So there are two ways to strike. You can wait. We need to wait. I'm looking at a 2-minute chart, and you can use a variety of other time frames as well. I suggest for short-term oriented trading off the open, we're going to focus predominantly on a 2-minute chart where every bar represents 2 minutes of trading. So we're going to let the first 2 minutes of trading go by. If the first 2-minute bar is red, that's when we know we have a match. Now, let me explain the concept of what a match is. A match is when the color of the first bar of the morning, the first bar of the day, matches the location. So when you are under the Fab 4, you are in red territory. When you are above the Fab 4, you are in green territory. So when Apple opens under the Fab 4, we want to see a color match. We know we're in red territory under, but will the first bar also confirm that it is matching its location? We get a red bar. So Apple matches its location. All right. Now let's clear this again. Let's do this again. There's a value in repeating these things. Here is our Fabulous 4 block. Underneath the Fabulous 4, we have a bias to the downside. Above the Fabulous 4, we have a bias to the upside. Where will Apple open? It was indicated to gap down today. The odds are it's going to open below the Fab 4. In fact, it does open below the Fab 4, but that's not enough. Just starting its day under the Fabulous 4 is not enough. We need the first bar to actually match, to give us that confirming matching color red. And then all we have to do is short below or enter below the first bar. So any subsequent bar that breaks the low of the first bar is our entry. Boom! We're going to protect ourselves above the first bar predominantly. So we're going to risk 1 bar. There are exceptions to this. I hope I get to that today. But right now, we're going to take the position of, once again, once we get the match, we're just going to enter below the matching bar. We're going to protect ourselves with a stop above the high of bar 1. And Apple produces that profitable sound. Now, that's the way we strike in the proper location That's the first way we strike in the proper location. There is another way to strike in the proper location, which is to use the color entry method. So this entry method is the confirming color entry method. The next color entry method is the opposing color entry method. So let's assume that you get a stock that is below its Fab 4, like Apple, but it produces the color green, like here. Now we have conflict. We have the stock is in red territory under the Fab 4, but it is producing a bar that is in conflict with its position, a green bar, a strong bar, a bullish bar. So we've got bullishness in negative territory, mismatch. Once the mismatch is removed, boom, we can strike. This is the opposing color entry method. So we can, once the low of a green bar is violated, boom, we can jump inside of the red bar that's violating the green bar with a protective stop above the green bar. Now, I want you to understand both ways that we enter the play. We enter the play under the Fab 4 when the confirming color is violated. Boom! We jump into the bar that breaks the low of a red bar. The red bar in this case is confirming the negative position. We protect ourselves above the first bar. If we get a opposite color bar, if we're in negative territory and get a bull bar, a green bar, we will jump into the red bar that breaks or takes away the opposing color. We'll get into the red bar that breaks the low of the green bar, and that's called the color game. Now, if you look very clearly, we have one entry off the confirming color, boom, protection. We have another off the opposing color entry, entry number 2. If you like, here's another green bar, entry number 3, 1, 2, 3, and entry number 4. Now, I want you to understand, this is a little bit beyond the scope of this talk, but the further you drop in your play, the lower the odds start becoming of greater success. Now, this should make sense. The beginning has the highest odds. The middle has decent odds. When you are several legs into your play, the odds start changing a bit. Okay? And a turn is usually close. And this is another talk of mine. When your 20-period moving average gets separated from the 200. But that's a different talk. Okay? I just want you to understand position or location at this particular point. Now, we can actually go to another. Let's look at Microsoft today. I just want to take a look at some of the most popularly traded stocks. And so everything, as most of people who've watched the market today, everything was down today. So for the most part, we're going to predominantly be looking at things that are under the Fab 4. But I want you to know how to grab this. I want you to know how to grab your items here. Okay. So first, we're going to grab the 20-period moving average. Item number 1, we're going to grab the 200-period moving average. Item number 2, we're going to grab yesterday's closing price. Item number 3, and we're going to take the last 45 minutes of the price data, and we're going to envelope that block. Now, including the block of price data, I want to take the highest element of my 4 items, extend that into the future, and I want the lowest item, which looks like the 200 here, of the 4 items, extend that into the future. All right. Not the best drawer here, but you get the point. And this becomes our fabulous 4 block. Now, look at Microsoft opens under the fabulous 4. We know that now the best trades are to the downside, but we need the proper entries. So we wait for the first 2-minute bar to reveal to us, is it going to be a conflict bar, a green bar, or is it going to be a red bar that confirms the location? In this case, it is a red bar, okay? But we need the next bar to break the low. Now, there is quite honestly a little tiny break there. Our protection goes above the high of the first bar. In this case, Microsoft does rally back to the upside, but does not stop us out above that bar in this case. We can add to our play whenever we get the opposing color situation, which is green bar, break the low of the green bar. Green bar, boom, jump into the bar that breaks the low of the green bar. Green bar, boom, jump into the bar that breaks the low of the green bar. Understanding that the lower you get, the odds start to diminish a bit of it working, especially if your 20-period moving average has dropped to the point of being wide from its mother moving average, the 20. And so here you can see the stock even out a little bit, even though there was more movement to the downside later, but you get the point. So this is one of the best ways that we use the concept of location off of the open, knowing what the bias is going to be off the open and waiting for our specific 2 color scenarios to occur. Now take a look at this. We can take a look. What's another Baba's a popularly a popular stock. This is a beautiful example, guys. Let's grab these 4 items again. Let's grab that fabulous 4. Let's grab the 20-period moving average. Item number 1, let's grab the 200-period moving average, item number 2. Let's grab yesterday's closing price, item number 3. And let's take the last 45 minutes or so of price data. Let's grab that chunk of price data and block it off, item number 4. Now, in this case, once again, the top of our price box is the upper portion of those 4 items. What's the lower portion? The 200. We're going to extend that into the future. This becomes our fabulous 4 block, which should serve as some form of ceiling above us. Now, look at Baba's first bar. It opens under the Fab 4, telling us that the best fluidity is likely to be to the downside. We have to wait for that first bar to give us a go or a not go. So if it's a red bar, it gives us a go. Red in red territory, match. Green in red territory, no match. We do nothing. We got the first bar as a mismatch. We got a green bar instead of a red bar in negative territory. Now, what we immediately do is mark off the low of that green bar. If the very next bar breaks the low, we're going to dive into the red bar that violates the green bar's low. Boom! We don't wait for the second bar to finish trading. We do it at the minute, the nanosecond, the instant that the low is violated, we're in. Where's our protection? Above the high of bar 1. We're going to risk 1 bar on this play for the possibility of many bars. This is one of the key elements to staying in this game, risking 1 bar but winning 8 bars, risking 1 bar but winning 12 bars, risking 1 bar but winning 40 bars, risking 1 bar but winning 3 bars, risking 1 bar, 1 bar, 1 bar, but giving yourself the opportunity to win many bars, okay? Now, let's go back to this. It's a beautiful example. We're entering into the red bar that breaks the conflict bar off the open in Baba here. We're protecting ourselves above the high of that bar, but we're not done with this yet. We're waiting for the very next color scenario to happen. Here's green, conflict. We're going to mark the low. Doesn't break. Here's green. The next bar is green. We're going to mark the low there. We're going to keep marking the low until we get bars that break the green. This bar actually temporarily broke the green. Boom. There's our second entry, and here's another green bar. The next bar breaks the green. Here's another green bar. The next bar breaks the green. You get the point. Now, remember, once your 20 separates fairly wide from its 200, you're in the latter part of that, at least that portion of the trend. You're likely to stall a bit, and the reliability of this approach, simple but powerful approach, starts to break down a little bit. All right, what else can we look at today? Facebook is a very popular traded stock here. Now, Facebook, very quickly here, we'll try to breeze through this since you understand the concept now. We're going to grab the 20, item 1. We're going to grab the 200, item 2. We're going to grab yesterday's closing price, item 3. We're going to grab the last 45 minutes of Facebook's price data. And we're going to grab the top part of the item, extend, and the bottom part of those 4 items, extend. We now have our fabulous 4 block. Stock opens below the fabulous 4, giving us its first bar as a red bar. Now, whenever you have a sizable tail, you can use just the body and ignore the tail. Some traders prefer going in below the absolute low. Some traders will choose the body. It's a personal choice, actually. All right. So entry 1, possible 1, entry 1A is another possibility, whether you use the body or the low. But one thing we do know is this: we are going into Facebook as a short below. We're going into Facebook in bar number 2. Okay. Now, we're not finished yet. When does Facebook give us the opposite color bar? Green. Now we mark the low of that green bar off, and boom, we jump into the bar that wipes away that green bar by breaking the low. When does it give us another green bar? Here, we mark the low, but the next bar doesn't break this green bar's low. It gives us a second green bar. Boom, we mark this low, and now this red bar breaks the low, and that's the bar we jump into. We usually have, on a trending day, anywhere from 2 to 5 entries. On the really long trending, you can get as much as 5 of these going. But a lot of times it's 2 to 3. On the real big trending days, it can be anywhere from 2 to 5. And you can take a look at this and see how many times Facebook gave us green and wiped out, 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 green and wiped out. And while all days are not as fluid as today was to the downside, it doesn't matter. As long as you are protecting yourself for those scenarios in which they don't work, you're only going to always lose, for the most part, 1 bar. Now, there are a few other things I can quickly show you here. What else? This was a play that some of our traders played this morning. It's really interesting because this one had a series of stop outs. I like to show the ones that don't work as well, all right, before it started working. So now look, here's your red bar, and you break the low here. If your stop is above this bar, you get stopped out. But there are several re-entries. Now, why would you want to re-enter a stock that stopped you out? If the stop out did not run away from you, meaning that if the stock just nicks you out and then comes right back to give you another signal, I teach my traders that you should give every play a second attempt. every stopped out play should get a second attempt, especially if you get that second attempt almost right away. So this stop out here in earnest is what immediately followed by a green color being violated. Boom. Here's a brand new trade. Boom. Here's a brand new trade. Boom. Here's a brand new trade. See the green bars? See the green bar? Here's a brand new trade. Boom. Here's a brand new trade. Boom. Doesn't work a tiny bit here. So knowing, it's not enough to know the color game. It's extra powerful if you know how to play this color game I teach with the right location and, of course, in sync with the right flow. Now, I wish I could quickly find, I can quickly find something. Let's take something like this. Now, here is the exact opposite, QID. So let's grab our last 4 items. This is the last thing I'll show you here. So we're going to grab our 20-period moving average. That's item 1. We're going to grab the 200. That's item 2. We're going to grab the prior day's closing price. That's item 3. Okay. We're going to grab the last 15 minutes or so of the price data. All right. We're going to block that off. Now, the top of this price data is the top portion of the 4 items, and the bottom price data is the bottom portion. I just want to make sure all my 4 items are in that box, utilizing the top one and the bottom one. Here's my fabulous 4 block. Now, if we were under, we're going to think down. We open above the Fab 4, so we're going to think up. And once again, guys, it's just the color game. Boom, red bar. Boom, red bar. Red bar gets taken out. Now, this is a much lower price, so your fluidity is different. But just to give you an example of something moving up versus every example being on the downside, it's the same concept. You're going to go with the flow in the right location, playing the color game appropriately. Guys, I am telling you, it's simple, but it's powerful. And that's the way most things are in life. The simpler they are, potentially the more powerful they are.